Hello again, this is Alex with MasterChartsTrading.com, and this is a market recap for the week ending in Friday, March 22nd, 2019. As always, please hit the like button and subscribe to this channel. Changes are coming, so I will show you what I mean in a few seconds. The prices are indeed going up for the services pretty soon. Let me just describe quickly what is happening in the market. So really nothing is happening for stocks. They're digesting the gains. We'll look at mini futures, S&P and QQQ. Junk debt so far is not really signaling the end of the stock market run. We'll look at some of the foreign stocks. Some of them pulled back quite hard, for example, Turkey. We'll look at the yield curve inversion, which is indeed happening on the shorter end of the spectrum. I wouldn't panic about it just yet. We'll show a couple of trades that we did for TLT, Treasuries, the long-dated ones, and the investment-grade corporates. And some people, some traders decide to trade it with leverage, so I'll show you what I mean. Interesting price action in Japanese yen, and oil is surprising to the upside. Finally, we'll finish off with crypto. So here's what I am referring to. And of course, this is the campaign that we're still running, MasterChartsTrading.com, hashtag everyone can trade. So if you type in everyone can trade, hashtag everyone can trade, you will get to the Indiegogo campaign and you can sign up there. Now, the reason why I am saying that it is such a great deal is because right now we're still running for the next 2 days, actually, literally a couple of more days is left. We're still running a few promotions that are, I think, are great deals. You got a 5-month package, for example, for under $100. And if you're buying them separately, you'll be paying $34.95 per month. So that's a big difference, over 40% off. You can also get some of the other packages, and you can look them up here on Indiegogo campaign. Everyone can trade hashtag. Alright, so let's look at S&P 500 futures. This is ES1 exclamation point. On this chart you can see 4 parallel lines. There's the green, the blue, the red, and the yellow. These are my custom programmed indicator. You can find out more about them at MasterChartsTrading.com. So throughout the presentation I'll be referencing them, and I'll just call them red line, blue line. These are mathematically generated indicators, so you can use them to trade any security, for example stocks. So let's look at S&P 500 futures. We're witnessing, I think, a breakout. We're approaching fresh highs. Fresh highs are not that far off. Again, they're like right there. So a breakout to fresh highs is obviously very bullish. This big, possibly red, or rather possibly engulfing kind of pattern, I mean, you need to really look in the context. So for now, I'm looking at this and I'm saying I don't see a big problem with this chart. I think this is a bullish chart and we should act accordingly. Here's an actual trade we did at MasterCharts Trading. We did S&P 500, and obviously this is a profitable trade. So you could have already made nice money there if you took some profits and advanced your stop basically. QQQ did the same thing. I mean, beautiful breakout. We sent an alert on the 13th of February, but there was another nice opportunity right there on 8th of March, and it just took off. Notice how it bottomed right around the blue indicator line and then just took off. So very easy to trade. This is what I've been basically doing. I just ignore everything and just look at the lines. As far as junk bonds are concerned, I still don't really see any kind of reversal. So stocks and bonds, stocks and junk bonds, the high yield bonds, correlate highly to one another. In other words, they kind of move in lockstep with one another. But so far I don't see any big issues. I mean, this is fresh high for the move for junk bonds, so I don't see a really undercurrents that are bearish. I'm hearing a lot of noise about bearishness, and actually I'll show at least one point, and that is the yield curve, which we'll get to in a few seconds. So let's first look at some of the other equities. So we'll look at junk bonds, and let's look at the foreign equities, and some of them did get sold off quite hard. For example, here's European equities, but just notice this price action. Isn't it beautiful? You can see it just bounced right off the line, right there. And so far, the European equities overall haven't broken out into the bull market, but I'm actually buying myself some of the European stocks. Here's emerging markets, EEM. Doesn't look too bad. I like the way the indicators are coming down here towards the price action, and this is usually a good sign, in my opinion, because this means that the price has less distance to travel towards bullish levels. They're really close. I mean, we can see a breakout for emerging markets, and it could just take off. Sometimes they just take off. This cannot be yet said about Turkey. You can see also very interesting price action right there on the 30th of January. Now, I did not trade this, and I, generally speaking, don't like to sell or short equities, and this is stocks. During the bull market, it's much more difficult to short stocks because there's a tendency of stocks to go up. But if you're, kind of more, I don't know, bolder, I guess, you're more taking more risks, then you could theoretically do this. I don't recommend it again to my subscribers, but some people like to do this. So one way to do this here was to buy puts, for example, here on the 30th of January, or you can just outright short if you have a margin account. And notice how huge drop today, for example, minus 10%. So there was a gap and then continued running lower. And this is what I'm saying is just very easy to trade. You just look at the price chart. You don't have to think about any politics or any kind of other events. Like, there is nothing in this chart that shows which was the president and what happened in the world. Nothing. We just simply look at the price action. This is what I'm trying to get at, is people try to make trading way too complicated. We just need to basically look at the price action and then enter orders. Are we buying or selling? This is pretty much it. Alright, so some of the recent action in bonds, especially in Treasuries, United States Treasuries. These are supposedly the safest bonds in the world. So they have been going up in price. Here's TLT, the 20+ year Treasury bond fund. This is like the ultimate safe haven. Now, nice breakout here, nice move to the upside. Notice exactly where the price action came in, and this is exactly where we went ahead and sent an alert with a beautiful 4+% move, almost 5% move in your favor. I actually myself am holding still. I went long here on the 11th of January, so I'm still holding and getting the dividend. Now, this price action also is apparent. Well, let me get back to this chart in a second, but let me talk about the inversion of the yield curve first. So here's the yield curve. It's on the left side here, and this is a data from 2000. So you can see that before and right here is the stock market. So before the peak in the stock market in 2000, the yield curve well, it wasn't exactly normal, but at the very least the short end of the spectrum was below the longer end of the spectrum. The normal yield curve kind of looks like that. So, you know, shorter shorter term yield is less than longer term yield. But then occasionally we get to the point where the yield curve inverts, for example, as it did in August of 2000. And you can see that the short term yield was actually higher than the long term yield. And then the market dropped for a few years afterwards. Kind of similar situation happened when we had the year 2007. It was not as pronounced, but you can kind of see that the shorter term yield was actually lower than the longer term yield of the 30-year. And then we also had a nice big collapse here as well. So as we advance forward, you can see that the yield curve is really, you know, was absolutely normal here back in just recently. Now the Federal Reserve has started increasing the short-term interest rate, and you can see the yield curve has changed quite a bit. And in fact, you can look at the shorter-term yield, especially of late, and you can notice that right now the short-term yield is actually higher than the like a 5-year yield. So this is sort of like a beginning of the yield curve inversion. It didn't really happen you know, to the longer term yields. You can see that the short term yields are still below the 30+ year ones. So this is the reason why I'm not terribly concerned just yet. However, if we're going to see longer term rates continue to drop, in other words, this is what's happening. You can see that the bonds are going up, and by extension, for example, here's TYX, the yields are going down. It's just the opposite. So the TLT, the 20+ year Treasury bond fund, is the longest of them all, and it has broken out as well. So in other words, the longer term yields I'm just showing here are as also dropping. Now let's look at some of the shorter term, and this is intermediate term yield, so 7 to 10 treasuries, 7 to 10 year treasuries, and you can still see that the 7 to 10 treasury yields are not yet inverted. But you can see they're also breaking out. In other words, the intermediate term rates are also dropping. And of course, the absolute winner are the short term yields. You can see BSV, this is a short term yield fund. Again, we actually sent an alert here on the 31st of December of last year, and you can see an enormous move for short-term yields up. Or rather, this is short-term bonds, and then by extension, short-term yields dropped significantly. You can see that the short-term yields are actually now higher than some of the, you know, about 2 or 5 year ones. What does it all mean? So far, I am not that concerned, but of course, if we see a longer-term bonds continue to appreciate, for example, TLT, that would mean that the yield or the longer-term yields will drop. So this could lead to inversion of the yield curve and potentially to a situation similar to 2007 and 2000 crashes. Is this going to happen? Nobody really knows, but we need to be on the lookout for this. So very briefly, I wanted to mention how to trade treasuries. Now you can simply buy TLT or sell TLT if you have a margin account. They don't, I mean, this is the biggest they move really. The bonds, this is like huge move right there, almost 5% move. This is a big move for bonds. So if you trade treasuries, you probably will want to have some leverage, and the leverage you can find here, just over-the-counter kind of ETFs that are widely available. For example, here's one TMF, and if you opened here on 4th of March using leverage, then of course you get a much bigger bang for your buck, 13%, almost 14%. But notice it's almost 5%, so it should have been like 15% gain for TMF, but in fact it's only like 13.8%. The reason being is because TMF, or rather all leveraged funds, have what's called slippage, and this just means that you are honestly better off holding the underlying security, for example TLT, versus holding the TMF, because TMF, the leveraged funds, they lose value over time. It's a known phenomenon. So how to combat that? Have a bigger account so you can trade TLT. So that's one way to do this, unfortunately. The other one, of course, is to use leverage TMF, but you need to really be very careful of how long you hold it for. So this was a really easy and beautiful trade, but sometimes they just go on sideways for a long time, and you really can't make money when it's going sideways, and also the slippage is working against you because this is a leveraged fund. So you kind of really need to know what you're doing, and like I personally don't really like to trade using the leveraged funds, but some people find them useful. Okay, one more thing I wanted to show is another recent trade, and this is for LQD. This is investment grade corporate bonds. Alert was sent to my subscribers here on 31st of January, and beautiful move higher. Again, you know, these guys don't really move as much, so this is more for investors for a longer term, and most likely for people with larger accounts, because you know these funds really they don't really move much, but they are not as volatile, and this could be attractive to some investors because they're not as volatile. So this is, you know, basically your preference for trading, and we do trade LQD as well. All right, let's continue to some of the other commodities and currencies we trade, and here's Japanese yen. So the Japanese yen is a little tricky, well, as everything, of course, but here on the 3rd of January of this year, my conviction that this is a true breakout was enormous, and I went ahead and I myself actually opened a USDJPY position in favor of Japanese yen. Yet you can see that the trade went against me, and I was actually forced to cover here on the 11th of February, forced to close my position. Now, I'm wondering if I was just a tad bit too early, because now what it looks like, again, we're seeing this, indicators are coming down, prices coming up, so really getting close to a breakout level, and I really kind of am looking to enter on the long side and buy the Japanese yen. On the USDJPY chart, you can actually see my entry here, and it failed. This was why, you know, I was stopped out. And, you know, it's normal. You will have some failures. This is why you have position sizing, and you will lose a certain percentage of your account, but this will not explode your account, and you can still trade the next day. So this is normal kind of occurrence, and this needs to be taken into consideration by each trader. Each trader has each individual level of risk tolerance, and this is the amount of dollars you're actually betting. So I'm looking at USDJPY, and I'm looking, maybe we're gonna see another move lower, and I'm looking to sell this currency pair in favor of Japanese yen if or when we get to this level of 108.366. Oil surprised to the upside, very interesting. So a couple of things on this chart that you should note. This is an actual trade. I shorted oil here on 31st of January. A few days later my target was achieved and I sold half right there on the 11th of February. And then since my stop was advancing already, I got stopped out the next day at a profit. So then we can see that the oil came up here above the red line, kind of bounced around, and you can see several attempts here on the 5th of February, on 26th of February, 6th of March, and of 8th of March. You know, there were attempts by the bears to push the prices lower, and they all failed. And then you can see a rally. So right now I'm still kind of indecisive, and I'm just not looking to trade oil until we see some sort of a resolution, either a breakout or a breakdown. Finally, let's look at LTC USD, Litecoin. For some reason, Litecoin is the only one that's actually moving higher. For example, Bitcoin, BTC USD is doing nothing really. Well, it's moving higher from the lows of February. Is it going to be breaking out? It's possible. I think they all kind of moved in lockstep. But LTC USD, I mean, it's interesting that it's moving higher, and it's possible it's going to break out above 67 here. If there's a breakout, then we should start buying it. It's pretty straightforward. So like I keep saying, you can trade pretty much any security using my indicators. So for example, LTC USD, you can trade pretty much on any time frame. For example, you can choose, I don't know, 7-minute time frame, and you can still trade it pretty easily. For example, in this case, if it's this is a bullish chart, so I'll be buying it, for example, here. All right, so head over to MasterChartsTrading.com, click on alerts and indicators, and sign up for one of the plans. Like I keep saying, we're going to be increasing the prices. So please head over now to MasterCharts Trading and sign up. You can also sign up using the Indiegogo campaign, and you can type in "everyone can trade," hashtag "everyone can trade," and it will take you to the campaign. The reason being is because we have really good deals here. For example, 5 months package. And they're exclusive. They're not available on the website. You can also have 8 months package, 14 months package, 2-year package, 5-year package, and a lifetime package, of course. And these prices are, I think, very good. You can see they're 30 to 40% off of the website prices. So head over to either MasterCharts Trading or to Indiegogo campaign. That's the website is located right there, Indiegogo campaign, and you can type in hashtag everyone can trade and find us that way. Okay, that's it for this week's recap. If you have any questions, please send them in. Thanks for watching and have another great trading week. Bye-bye.